Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Friday afternoon. I hope you all had a successful trading week. As always, before we jump into my portfolio and the markets, let's get the usual disclaimer out of the way first. Everything that I share in today's live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing that I truly recommend, if you haven't done so, is go and check out the Elliott Wave Principle. You can read this wonderful book for free when you use the link in the description down below. And you can use the same link to get yourself a physical copy. With all of that out of the way, let's jump into my portfolio. And we can see that we actually have a slightly break-even start into the day, just like yesterday, but today with like a slightly red touch. Overall, yeah, nothing changed. Portfolio is unchanged, mostly 600 GameStop shares, our biggest position against we keep writing covered calls. And which means when we jump into the markets, GameStop is obviously the most important one. However, considering the expiration, so our options are till March 28 at the $37 strike price, we are fairly safe here. As I've shared yesterday, it appears to be that we have this big 1, 2, 3, 4, and then later wave 5 impulse wave going on. And within this fourth wave, or actually diagonal, because we enter the territory of wave 1, as we can see here. And within that fourth wave, it looks like we have wave A, wave B, and now our wave C further downwards. We are already in the target area for wave C, so it's possible that that's already the entire move. However, I would not be surprised if we get to see the 22.73 mark, which happens to be the 78.6% retracement. And then from there, actually start to develop our fifth wave. Until that happens, or I'm proven wrong, all we have to do is wait, which is a little bit boring, I get that, but yeah, patience is basically the key here. Like Warren Buffett said, the stock market is an instrument that transfers money from the impatient to the patient. And yeah, while it makes the streams less exciting, we currently just have to wait for this to play out and for our options to expire worthless, or for us to find a spot where it's worth rolling them out for additional credit. Considering the premium that we sold, so we had an average price of $100 for those calls, which means in total we could realize $600 in profit if they expire worthless, which however also means that if we roll them now, we basically would have to give back $400 to buy those calls back. And then, although the price will update in a minute once the market officially opens, and then we would get credit for the new calls, and it's likely not worth doing, but we will check in a minute once it happens. Yeah, patience is a virtue. Yeah, exactly. Yeah. Additionally, yeah, before I forget, Cherry, if you're here and watching, please let me know in the chat so I just know that you're there. Thank you very much. And additionally, no, we don't need to go here. Now I'm confused. Thank you, sweetie. Yeah. Yeah. Additionally, let's try to move on here. And we still have the charting issue. I don't know what's causing it. I'm, as said, in talks with the Motive Wave support about this issue. And so far, I don't have a solution. So as we can see, for some things, charts are working. Now I deleted all the local data. Maybe I broke it completely now. And for some things, we see that we receive updates. We can also, where was it? Configure active tickers. So for up to 100 tickers, there should be no issue whatsoever for Interactive Broker to provide the data. We can also see that there are no issues with the connection on this end, which makes it a little bit weird. I'm gonna try to restart Motive Wave, so 1 second. One second. In the meantime, we already get premiums, or the market is open, so we can check, as said, March 28. GameStop, $37. Again, there is no volume, which makes it tricky, so if we were to buy them back and we roll them out to, for example, April 11 would be 42 days. Although there we would have to, for example, go for the $40 calls or 35. But yeah, we can see there is no open interest for April 11. April 17 is still a little bit far off, in my opinion, and there might be no 40. No, there are. Okay, so, but there is no volume for our March 28 $37 calls, which makes it difficult to get an accurate quote, which is a little bit of a bummer. So technically we would have to pay back around 400 as said if we want to close out those calls. And on the other hand, if we roll to April 11, we can see that the premium is actually not that bad, at least the listed premium, but it would be around 200. So if we could get a quote here, might actually consider doing it. Yeah, so let's keep it open for a bit. Let's start Motive Wave and then let's see if the charts are now loading or if we can get the ones to load that we want. In the meantime, I have to quickly up there. Okay, I'm just going to be patient here. I'm trying to set up a virtual machine on the other end, and it's just not behaving the way I want to. Yeah, now we officially don't have a GameStop chart either anymore, apparently, so I'm gonna give this a couple minutes. I don't know where the issue is from, or where was that file, not backup, but somewhere configure. No, where was that? Help, log files. Okay, GameStop now loaded. Is there anything meaningful in there? Not really. Okay. Okay, let's close this, let's close this, let's close this. So GameStop we already covered, so possible drop by another 10% before we go further up. And Barnes & Noble, do we get a chart? Fingers crossed. Yeah, we'll also give it a little bit of time. In the meantime, yeah, we don't get a quote here, so there's no volume on the March 28 $37 calls. We can see there's a little bit open interest, but there are no bids right now, which means we don't get a mid value. And the $40 calls for April 17th, as we can see now, or April 17th, that's actually a little bit too long, but we can see that there it's around $100 in premium that we could get for those. If we were to go for, so which already theoretically, if we were able to buy those back for 400, then technically we could make a small profit by extending our options, but we would have to roll them out relatively far. If however we go for the $35 calls, which I think would be a dumb idea here, yeah, it's not, yeah, without getting a quote for the March 28th calls here, it just doesn't make much sense, which is a little bit of an annoyance. Yeah, I'll keep there. We might actually have to wait for our current calls just to expire. Yeah, why does it work like this and why does it not work the other way? So I really don't see how that, yeah. Anyway, so Barnes & Noble is trading a little bit down. As said, we are okay as long as we don't break the 831 mark. If we were to break that one, we probably would have to take our loss in quotes or at least reevaluate. If we make that a little bit bigger for now, it's a little bit frustrating, but yeah. So never had issues like that with Motive Wave. So I don't know what started it and what's causing it, but I'm sure eventually we'll figure it out. Yeah, in the meantime, from the looks of it, we have a 5-wave impulse here that's relatively nicely followed by a 3-wave correction here. So A, B, C, followed by a 5-wave diagonal here, and which brings the options up that this is basically an impulse, a correction, and a diagonal correction, next impulse correction, maybe next diagonal. So we should go further up. Or this is a 3-wave corrective move, and from here we are slowly developing further down, which means that's the reason why at 831 we have to reevaluate and potentially consider just cutting our position. because then the downward potential is higher. The reason why I believe it should be the upward example is because we also have a potentially impulsive pattern here, although that would require that the corrective pattern finishes down here, which would then mean that here we are in the next impulsive wave, but only time will tell how that plays out. And since that chart also is not loading properly, we can already move on. Immersion unchanged, I guess, if we get a chart. Exactly, we're still waiting for a little bit further of a push. We have to at least probably touch the 50% retracement, but I actually would expect the 61.8 before we potentially see the next upwards move. Cost, we're clueless. We're waiting for the pattern to become clearer. Our current position we just hold. I have to admit the entries there were not that well timed, but thankfully it's not a very big position, and therefore we can just wait for the pattern to become clear and then either be happy about our entry and average down, or just cut our small loss here. NEO is retracing today a little bit, so it spiked up. We again have what appears to be the potential for, the potential for the turnaround of this corrective move. We have a next to perfect impulsive pattern here. However, the correction down here has been baffling so far. We're gonna have to wait a little bit longer. If we again from here get a turnaround and a new low, then I would maybe start to lose hope. But the real crushing or important point is that we stay above 363. As long as we stay above 363, we could use any available premium that we earn or any available cash to just average down and increase our position. If we break 363, we have to abandon our position and reevaluate everything from the beginning. With that, we pretty much covered the things that I'm currently holding that matter. The only exception, no, actually everything. So for everything we got a chart. The one thing I would be curious about is that front line. If we get a chart, yes, we get a chart, which is now retracing a little bit. So as I said, I covered it before the earnings and pointed out that it should retrace further down to the at least 38.2 retracement. It actually made it to the 50% retracement here. And now potentially this is the entire correction, A, B, C, which means if this was the entire correction from here, we should still have more than 100% upside to the minimum target. And this here would potentially be the first wave 1, wave 2, wave 3, wave 4, wave 5 that takes us up there. So right now, not the worst entry. Stop loss could be at 13.41, which gives you a roughly 10-to-1 profit or risk reward ratio. Unfortunately, we don't have any spare cash to jump into this, so we'll just have to wait and see if I'm right without actually having active involvement. SMCI, on the other hand, there I'm also going to be curious if eventually I'm proven right. So as I mentioned yesterday, this is potentially either wave 1, wave 2, wave 3, wave 4, and we get a wave 5 down, or what I believe more likely wave A, wave B, and now we are getting wave C down, and that will or should take us down into the area of at least $20, but more likely in the below $10 range. I actually expect this stock to trade at, or to hit the 61.8 retracement at $5.68 at some point in the future. And now reset scaling. And yeah, I'm just waiting for this to play out to see if I'm right or not. We also don't have a horse in that race, unfortunately, but it still doesn't hurt to label those things. I'm a little bit surprised about the DJT stock price development there. I have to say I was potentially wrong, or actually was wrong, I guess. So because I believe that this free wave move was the entire correction. Turns out that potentially, so this here is irrelevant, that here is still relevant. And then instead of this, we would need to put it like that. And yeah, and then we need the 61.8, 1 second. So 61.8 level as well. So it looks like here was wrong, can't always be right. And if this, however, is now the corrective move, we would expect a turnaround at 21.55. So if I would plan to enter here, I would enter at 21.55. Stop loss, however, would need to be at 11.75, which means 50% risk for an unknown reward. But again, only time will tell how this plays out. But even at 11.75, I believe the company would be hugely overvalued. And any price development would be pure speculation or a way to, I don't know, bribe the current president of the United States. What else can we look at? And no, Amazon actually. Amazon is declining further. Okay, we're moving further away. I'm wondering if I was wrong here, or at least partially wrong, because I expected back in November when we were here, I actually mentioned that I expected we reach the 251.40 because it visually looks like 1, 2, 3, 4, and wave 5 should then usually reach that area. Very wrong. Did wave 5 fall short a little bit here and only reach 242? And we're actually now, are we actually now correcting this entire move here? So all of it, those 5 waves, in which case we would expect a drop overall like A, B, C down to at least, or most likely actually, the 38.2 retracement at 159, which would still mean a 20% drop for Amazon before we potentially see the next wave developing. So I'm curious to see how this develops. I don't like being wrong, but it is possible that I only got it partially right, so that basically my profit target was slightly 5% off. Yeah, it doesn't help if you're then still in the position, but everyone that would have entered in November when I originally made that forecast should technically be break even, or with a trailing stop loss should have been able to lock in a profit. But at the end of the day, don't forget, as I mentioned in the beginning, always make your own decisions. I'm just sharing what I think is going to happen, and I obviously am human, which means I will sometimes be wrong as well. Yeah, what else do we have? Nvidia would maybe be interesting. You are down here. So I didn't watch the earnings, but I'm actually surprised by that further decline. I have to say, visually, this starts to look like I originally thought this might be a flat correction. And from here, we're going up further, which is still possible. But if we break the low here at 113.01, then we have to consider that this is actually the beginning of a 1, 2, 3, 4, 5 diagonal move down, followed by correction, followed by another move down. So then there would be still quite some downside. We'll have to zoom out here a little bit. Maybe weekly chart helps, but considering how insanely, yeah, it feels like we're missing a move here, yeah, so visually. So let me correct that. So if we break the 100.95, that would be the cause for worry. Outside of that, it feels like this should be wave 1, wave 2, and then wave 3, wave 4, and wave 5 is still missing. Or at least not complete, yeah, unless this correction here is different and I'm mislabeling it, and wave 5 just goes this part here, which would be similar to wave 1. So that's a possibility, which means worst case in Nvidia, based on the weekly chart, it could be that we're retracing this entire thing here, and that would obviously mean that there's another 50% downside. Not very, very promising, but time will tell. So yeah, that's that there. And I guess outside of that, there's not much to look into. Bitcoin is now at the 82,000 mark again. So it was possible that yesterday we already had the end of the correction here. Now with that move, it looks like obviously the correction is still ongoing. Question is, what level will it hit? So where will it stop? Right now we're still bouncing around 82,000, which would be the 38.2 retracement. Yeah, I think our pattern is still solid, but technically even the 61.8 retracement is possible at around $70,000 for this to be a valid corrective pattern. We'll just have to watch, wait and see, yeah. And maybe if we free up some funds from something else, slowly increase our position. I believe that Bitcoin, even if it might trade down or sideways, I mean, we always have times like here where it just goes sideways and down and so on, or in the past, in the past, there are always periods, as we can see here, where it goes down, yeah, for a longer period of time. So I believe that even though it might go down temporarily, and by temporarily, it might possibly months or even a year or two, I believe that sooner or later we're going to get to see a new all-time high, simply because of supply and demand, because the supply of Bitcoin is obviously very, very limited. And with every day a few more people learning about cryptocurrencies, the demand for it is slowly but steadily growing. Yeah. Anyway, I think with that, we're going to call it a day. There's not much news. So as said, GameStop positions unchanged. We'll see if we get a push to the 78.6 retracement, but it would not surprise me. Either way, I believe that after that, so even if that were to happen, if we didn't already finish our retracement here, if that were to happen, that after that, it will get our next wave upwards. So right now would be the time to potentially buy more. If I would sell cash secured puts right now, I would do that probably not, or I would probably do that Okay, February 28 is today, but if we don't look on the weekly, I would probably do that for the $21 or $21.50 strike price. And there I have to say, because of the, in comparison to other periods for GameStop, relatively low implied volatility, the premiums are ridiculously low. So it's not really worth it. So I'd rather wait for the potential turnaround and then write cash secured puts. If I would write cash secured puts at the moment, always slightly below the current price to pocket more premium, to potentially enter the position, and if I cannot enter, earn premium. And as for the covered calls, yeah, there is no point or not much point in rolling hours down right now, because the problem with that is if the correction finished here, we would start the next wave up already, and then by March 28 we could potentially already be above 30. So we rather just keep our current cover calls, especially since we don't get any prices quoted for our March 28 calls. Yeah, now there are actually, so if we roll them to what would be April 11 would be 42 days. April 11, and if we roll them there, the 37, then, well, for that I would actually roll it, but we can see there is no bid here. If we roll them, there's no volume for April 11. There is also no volume on the 35. There would be on 36, we would get a quote, but again, that's meaning rolling it. So we would roll it $1 down, and potentially then it says so that we might actually do. So we roll them to 36 for April 11. Let's see if that gets filled. Let's double check. So we buy back the March 28. $37 calls, yes, and we sell April 11, $36 calls. So mid price, actually, let's go to bid and submit that order. And let's try if we can get that to fill for minus 350. Okay, let's just have it done. Let's go to minus, not like this, minus 1.6. Oh, and now the mid changed instantly. Yeah, that's obviously nice. Yeah, so might have missed our shot of making that. So again, we would have to buy back those, and we would want to sell April 11, and then they are ideally actually the same, but if we go for 36, so do I want to do that for $300 in premium? No. Yeah, the bid is now basically based on our order, so that doesn't help us. Yeah, well, then we don't roll them now, so they just stay on for another week, so cancel the order. And with that said, I'm gonna call it a day. Thanks for stopping by. I hope you were able to take something away from today's stream. As always, don't forget, like, subscribe, enable notifications. I wish you all a very, very pleasant weekend, and then see you all next week again with another episode of Daily Market Mastery. Till then, bye-bye.